Hey guys, Mark Parsons here with Remax. Just want to do a quick video on the question, is it a good time to sell Vancouver real estate or real estate in Greater Vancouver, the lower mainland, whatever you want to call it? Is it a good time to sell now? And the answer, if you've been considering selling in the next, say, 1 to 2 years, I would say the answer is absolutely yes. Maybe even if you're considering selling in the next 2 to 3 years, with home prices all across the lower mainland in the last 3 to 6 years, depending on if you're talking for the major increases, whether it be condos or detached homes or townhomes. Across the board, I mean, price increases are typically anywhere from about 50 to 70% over those last 5 years. So if you're selling now and prices are down a few percent, what are you really missing? You're getting away with the lion's share. There's no certainty where it'll be in 6 months from now, a year from now, with interest rates going up and inventory so high and sales so low. But right now, prices have been rather resilient. So what I'm looking at here right now is the lower mainland detached homes annual price variances. So the change of price year over year from September 2017 to last month, September 2018. Anything circled in green is up. It's not even down. So people are worried about selling in the market. It's too slow. Average prices in a lot of these areas for detached homes are up. Anything circled in the red, prices are down by 10% or over, and anything that is not does not have a border around it is somewhere between 0%, no gain, and then -1% to -9%, which with all of those ones I would consider in regular market fluctuations. Nothing too major. I mean, Port Moody is down 1%, Coquitlam is down 5%, North Vancouver down 3%. These are all, the market is always going up and down, so I'm not highlighting them based on minor variances. If we get on to attached, so this is condos and townhomes. For all the buyers out there that I speak to that are waiting. They're waiting because the market is slow. I'm not sure what they're waiting for happen, but if you have been waiting to buy a condo or a townhome or even a home in any of these areas that's circled in the green, you're losing out substantially. In the last year, interest rates went up by about 1%, and 1% in interest rate increase takes off about 10% of your ability to qualify, or increases your cost by 10%, however you want to look at it. The bottom line is, if you are looking to get a mortgage and you're waiting to buy, the only markets that you would have come ahead on are the ones that are circled in red. The ones that are circled in green would be a total loss because they've actually gone up while you've been waiting, and the ones that aren't circled at all, they would be a minor loss for you for waiting. But you can see a bird's eye view from this, what markets are up, what markets are down worth noting. And yeah, all I can say is we're in a strange market. It is a good time to sell because we're still at those very high peaks. If you want to take that money off the table, then you haven't lost much, if any, yet in some places. If you're downsizing, it is the perfect time. You're selling where you're getting most of your equity, and then you're dealing with a market that's either flat, maybe going down, slightly up. Nothing like before. When people selling, when you could sell your home, in 2 days. Well, you have to understand, you have to turn around and go and buy your next property in that same market, where often you'll be in multiple offers, you'll be losing out on properties, and too often than not, people get the pressure on them. They end up buying their next home not being the ideal home that they were looking for. So all I can say is, for those people who are looking, who are thinking of buying or even selling to buy, the best time to sell and then buy is not when the market is going up. That's the only time when the market can take money from you, is if you sell your home and in the time you're looking for your other one, prices go up. In the market that we're in right now, it's likely going to be flat, maybe slightly down. If there are any increases, it's going to be very minor. Keep in mind, these increases that we're looking at here are year over year, not month over month. So now is absolutely a good time to sell and get into a new place. For those looking to buy, we're in a very strange market where it's actually a great time to sell and to buy. Now, normally this wouldn't be the case, but when we were at peak prices, and as well we have interest rates that have been rising and that will continue to rise, you want to be able to sell your home and lock into your next 5 years of interest rates at the best rate possible, because it's likely that interest rates will be going up by about 1% in the next year, which will add another 10% approximately of cost to you. Or if you are mortgaging yourself to the maximum, then it will take away 10% of your buying ability. And we'll just get into what we're expecting with interest rates and why people should be acting. I mean, Canada housing market has avoided disaster, experts convinced after latest data. Now, I have always said there's no such thing as a Canadian housing market. There's not even a Vancouver market. But when it comes to policy, interest rate policy is federal. So this is the only time where a Canadian housing market is actually relevant to you. When you're talking about selling your individual home in your neighborhood, a Canadian housing market means nothing. But when we're talking interest rates, the policymakers are at a federal level. So down here it says the key takeaway is that housing market is for now no longer a major concern for policymakers, especially with household borrowing decelerating notably. So when the policymakers are no longer concerned about the housing market, their primary concern is going to be inflation, and interest rates will rise to control inflation. Now, we just had the recent how the new USMCA trade deal will make Canadian housing more expensive. This is where what's going on in our country as a whole is going to affect your buyer, your market when it comes down to interest rates rising, or for those who are holding off. Holding off is not a good thing to do right now, because there is no certainty that prices will drop, but it's almost certain that interest rates will rise. And if we scroll down here, how is this affecting us? If the trade deal had not happened, it would have put a significant downward pressure on our economy. If the trade deal hadn't been put together, there would have been uncertainty. They wouldn't have been sure how much activity would be going in the economy, and it would make the policymakers reluctant to raise interest rates and put additional pressure on our economy. And it says, and so for this reason, the Bank of Canada was hesitant to raise rates any further until we had a super important free trade agreement in place. Next, it goes to say, now that the deal is in place, the new focus for the Bank of Canada will be inflation, which has grown above the Bank of Canada's target levels in recent months. So they're going to be raising rates, which is why now that we have a trade agreement in place, it seems like a certainty that we will have Bank of Canada rate increase at the end of October. The next date for the Bank of Canada meeting to raise or not raise rates is October 24th. And it says probably followed by, let's say, 2 or 3 in 2019. When the government is telling us this, they're warning us. This is not something they want to surprise us with. They want people to prepare. They're going to be not focused on housing with their policy. They're going to be focused on inflation. And they're telling us interest rates are going to go up. For those waiting to purchase, if the next year looks anything like this, even if prices don't go up, if interest rates go up 1%, you will need housing prices to drop 10% just to be even, just to match it. In most areas, we are not going to see a 10% drop in real estate prices, but across the country, we are going to see interest rates raise likely by 1%. We'll see if it happens in October or not, but even if it's not that day, they're laying out what their plan is for us. The other thing is, you say, well, with interest rates rising, housing rates are definitely going to drop because it will take buyers out of the market. Actually, it's going to affect the high end properties first, because all of a sudden people who thought they could buy homes will now buy smaller homes, or people who are looking to get into a home will now buy a townhome, etc., etc. So it shifts buyers around, but it doesn't make them completely disappear. It takes out of the high end and it takes out of first-time buyers, and it also makes people hesitant, which is what we're seeing right now. But you've heard it before. So the B20, better known as a mortgage stress test, must be removed by the federal government. So already, as interest rates are rising, this stress test that has had a big impact on our market, people are having to qualify at 2% above the bank's benchmark rate. This thing is not going to be there forever. I know it seems like it, but when we get into this, again, this is federal. So when they put this on, not all housing markets were like Vancouver's. I mean, you had Calgary and Edmonton and other markets across the country that were already down, and they get kicked by this. So it says the unintended consequences of B20 are the damage it has created in other Canadian markets, particularly in energy-rich provinces like Alberta, Saskatchewan, and Newfoundland. So it says mortgage professionals Canada has come out against B20, which is the stress test, and most recently the Ontario Real Estate Association has joined saying it must be cancelled. The thing is that as interest rates rise, it will make more and more sense for them to take it out. If interest rates go to 4.5%, they're not going to have people needing to qualify at 6.5%. They'll get pressure. And likely that will come out. So it's not just going to drop housing prices for buyers. It will go up and it'll bring you back to where you were, but you're not at any advantage to be waiting. The only thing is interest rates will be going up. They're not going down. You can lock in your expenses for the next 5 years. Another thing, our price is going to be going down. Layer of BC taxes and fees add up to 26% tariff on new home costs. So if these aren't removed, one of two things happen. The builders will either just pass that on to the consumer, which means higher prices, or at least combating back from prices dropping, or they say, hey, we can't make a profit. And then, new building permits go down and less people are building. And what happens then? There's less supply, which also puts pressure on prices. So I wouldn't get too excited that you're going to see any major material price drops that will be able to offset the added expense of increased interest rates. In my personal opinion, if you're looking to act, whether it's to sell and buy, or to be buying in this strange market, now is your best time to take action. Sellers, you can get the lion's share of your equity before prices drop, and you can lock in while interest rates are still low. For buyers, it's really a no-brainer. Home prices, the chances of home prices dropping enough to offset the almost certainty of interest rates going up, in my opinion, it's not going to happen. It will not be that big of a drop in home prices, but interest rates will be going up. And I mean, if we go forward, well, who's going to be able to afford it? Well, Canadian population explosion, the biggest gain since 1957. Over 500,000 people came into Canada this year, and I think they were expecting around 400,000. Where do these people go? A lot of them are coming out to the lower mainland, as well as Toronto, and then dispersed across other major cities. But when people come, whether it just continues to put pressure on housing. And why are these people coming? The lower mainland industrial investment value increased by 253% over the year before. So, I mean, the jobs are out here. If these companies are investing this type of money, the jobs are out here. The people come, the demand on housing. We may be in, high inventory, low sales right now. Financing has been tightened up. But if you're expecting any massive price drops in real estate that are going to offset the eroding affordability from increase in interest rates, I just don't see it happening. It's not going to be that much. For 1%, you need another 10% drop in prices. And if you really are banking on that, you have to think specifically of what your product is, because we're not going to see those drops in certain areas on certain products. You might see them, at at the very, above 1.5, sure, maybe above 1.5 million, we might see fluctuations that could offset. But down below, and especially below a million, I highly doubt it. It seems extremely unlikely. So, yeah, I know it sounds strange, but the timing to sell is now if you're thinking of selling in the next, say, 1 to 2 years or 2 to 3 years, maybe. If you're thinking of staying for another 5, 10 years, then close your eyes. Don't even worry about any of this stuff. And if you're looking to buy, you need to get in while interest rates are lower right now. It's going to lock in your expenses for, typically it will be 5 years. And other than that, if you have any questions about the market, the evaluation of your home, anything, or if you'd like to get put in touch with an incredible mortgage broker, I work with a very specific mortgage broker who I recommend to all of my clients. You can email me if this is on Facebook. You can probably just click and send me an instant message, or wherever you're seeing this. My contact info should be around. Let me know if I can help out. That's what I'm here for. Thanks a lot, guys.